Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Tuesday, the 22nd of September. Starting off with Advanced Energy, where it looks as though we've got a breakout, V-shaped bull flag here for September, bouncing off a rising 50-day moving average as well, and guessing where the top of the channel is here, because obviously there isn't that much charting furniture to play with, but the guess is that the top of the channel is at 0.4 pence, and that's a target while the shares hold above the 50-day moving average at 0.17 pence. Time frame on the move north, possibly by the end of October. Stock which has had a good update today, at least judging by the reaction on FinTwit, is Blue Star Capital. I don't know whether this will be the one that takes the shares through the rather difficult 0.25 pence resistance level, but at least while we hold above the floor of the rising trend channel from the end of last year around 0.32 could be the target for the stock over the next 4 to 6 weeks. It'll obviously be quite impressive if this was the time that actually broke the shares through the top of the recent resistance area. On to a stock which has been relatively rare here on the heroes, and we've got Cambria Africa, rather, can't even say it properly. Cambria Africa with a 2-day bear trap below that line of support from April, so 0.25, I suppose 2 up to 4 days intraday as the bear trap, but a couple of closes there below there and then back up again. So it does suggest that the market wants to take the stock higher. Confirmation really would be an end of day or end of week close above 0.28 or 0.29, which is the 200-day moving average. Get through that successfully over the next few days, then the target here could be as high as 0.5 pence, which is the March resistance line projection. Harvest Minerals is the next stock of the day, and interest here, I suppose, is coming from both the bear trap from below the August support at 1.8 pence, and also bouncing off the floor of this broadening triangle from July around 1.7 pence, as well as bullish divergence with the lower lows for September and higher RSI trace. So possibility here that we have a turnaround in place. If you're cautious, you should wait for an end of day close through the 50-day moving average at 2.03 pence, where we've failed so far today. But above 2.03, looking for the top of that broadening triangle from July as high as 3.6 or 7 pence over the following month or two. So maybe keep that on the watch list. Petrodiamonds is the next stock that we're looking at, and here you can see that also got a broadening triangle situation, this time also from March as well. The positive here is really the way that the shares have remained above the 50-day moving average at 1.54 pence in this consolidation, so it looks like an extended bull flag, let us say. Probably want to see north of 2 pence as an end-of-day close to confirm that we're going to head higher this time, especially after the bull trap that we had earlier this month. But above 2 pence on this occasion could start the journey for a move up to 5.5 pence, which is a rather ambitious-looking target. At the moment, obviously, all bets are off if we go back below the 50-day line and 1.54 pence. Easier situation to look at the moment, much easier in fact, is Scancell. And here we've got a situation where we've got this, we had the initial target there around 12 pence. That was a resistance line there from December. Rather obligingly, the shares came back to test that old resistance line as new support and then bounced sharply. Which gives us the view that while we're above 12 to 13 pence at the moment, we could hit the top of the broadening triangle from way back in, well, I suppose it's the end of 2016, taking the shares up to 25 pence, which obviously would be quite a result given that we were trading sub 5 pence or around the 5 pence as recently as July. So quite a result there for Scancell at, well, over the near term. Stock which I can see a lot of people really willing higher at the moment is Integamen. Good fundamental story, and the chart looking pretty nifty as well. Overall, we've got a sort of W-shaped reversal there. The neckline broken at 25 pence last month, and we've shot higher ever since. We did have that retracement from 50p down to, 28, which obviously was a little bit painful. But the view at the moment is, at least while we're above September neckline resistance at 34.5p, we should head higher and head up towards the top of that March rising trend channel as high as 55 or 56p, hopefully well before the end of next month. Just a couple of stocks to go now, one more obscure than the other. Urban Exposure has broken, well, this month slowly broken that big triangle formation from March. I suppose nominally at the 60p level. We've stayed mostly above 60p on an end-of-day close basis, but the view here is, at least while we're above the 50-day moving average in that broken March resistance line, we could head significantly higher up within this rising trend channel from February. Top of the channel there, heading towards 105p, and that could be hit over the next 1 to 2 months while we hold above the 60p area. Dish of the day by quite a mile has to be Valerix. It's quite a popular stock. What we had here initially was that broadening triangle target at 32p. That we've overshot the runway on that one, which is quite gratifying. And the view here is that an end-of-day close above 32p today should be more than enough to take the shares up to the top of a June rising trend channel, currently pointing at 46p, and hopefully that'll be seen over the next 2 to 4 weeks or even sooner. This stage only really back below the initial September resistance at 29.5p, really slowing down what looks like a very constructive picture at the moment. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.